Good afternoon, everybody, and welcome to the monthly Tax Investigations webinar. Myself, Dave Jennings, and my colleague, Dane Skeeber, are going to cover Code of Practice 9 fraud investigations in this seminar. Thank you for watching this and joining us today. If you have any questions, you can pop them in the chat box at the bottom there, and we'll answer them at the end of this session. Dane and I are both ex-HMRC Inspector of Taxes, and we have many years, maybe even decades of experience dealing with investigations and disclosures. Code of Practice 9 is the more serious type of HMRC investigation, but it can also be used as a voluntary disclosure if you are admitting fraud and you want an immunity from prosecution. We say Code of Practice 9 is the most serious type of investigation. That's the most serious civil investigation. The most serious investigation is a criminal prosecution. Of tax evasion, tax fraud is and can be resulting in criminal charges, which can end up with prison sentences and large fines, and equally then potentially recovery of any assets that were a result of criminal behaviour too. So obviously criminal investigations are the most serious type of fraud reviewed by HMRC. You usually get the unannounced knock on the door or the dawn raid accompanied by the police. So I think you would know if you had one of those. Equally, you may get an invite to an interview or an interview under caution. And again, you know that's under criminal investigation. HMRC's team that deal with the criminal investigations also sit next door. They sit alongside. The teams are integrated now with the civil investigations. So every case that results in a Code of Practice 9 inquiry has probably already been reviewed by their criminal colleagues. In fact, every case is a mandatory review to check if there's going to be prosecution. So even if you approach HMRC for an immunity from prosecution and the voluntary Code of Practice 9 procedure, then they will still check their systems to make sure that individual was not going to be prosecuted anyway. Volunteering to go forward with the Code of Practice 9 will not result in a criminal prosecution, providing it's a full disclosure of the tax issues. It's not self-incriminating. You will only be prosecuted if the revenue are going to prosecute you anyway. So it doesn't make it worse. It just gives you that immunity from prosecution by approaching HMRC first before they open an investigation, and helps reduce penalties, which we'll cover briefly this morning as well. So that's a very short, quick introduction to the talk today. I've now set up the slides, and this is our introduction. Churchill Tax Advisors provide full tax and accounting services. And we're going to cover, again, as I mentioned, Code of Practice 9. So the topics we're going to cover today are around the Code of Practice 9, which is also known as the Contractual Disclosure Facility. We'll cover why that's named. We will then go through the points that have been prompted, or if it's unprompted, the start of it and what happens throughout, and then to conclusion and settlement. So as I've mentioned, Code of Practice 9 is only for tax fraud, tax evasion, as it's been known in the penalty regimes as deliberate behaviour. Within the Code of Practice 9, if the revenue suspect tax evasion, then potentially they will be looking to go back up to 20 years, which is a maximum in law. The revenue can assess back taxes. Equally, if you're making a voluntary disclosure, again, that voluntary disclosure has to consider perhaps the last 20 years. The reason for that is the step issue around what the revenue can assess. So ordinarily, with time limits, they can assess 4 years without considering an individual's behaviour. 6 years if the revenue can prove the taxpayer had acted carelessly in their tax affairs, or 20 years if it's involving deliberate behaviour, which is the same as fraud or tax evasion. If you receive a Code of Practice 9 letter from HMRC, then you have a very strict 60-day time limit to respond. Equally, if you make a voluntary disclosure to HMRC, you have the same 60-day time limit to respond once the revenue have registered and replied to that request for a Code of Practice 9 immunity from prosecution. That 60 days is where you consider the outline disclosure, and we'll come to that shortly. If it's an unprompted one, that's where you are going to the revenue to register your request to admit tax fraud on the grounds that I want an immunity from prosecution, but I'm going to disclose some tax irregularity from the past. Code of Practice 9 can be used for that as well. So this is a different type of disclosure facility compared to the worldwide disclosure facilities or the Let Property campaign or the digital disclosure facilities. None of those arrangements have any immunity from prosecution. And although they do cover deliberate behaviour as well, and potentially 20 years, and obviously the time limits for offshore income have different rules, around 6 years, 12 years, sometimes depending on the years in question, or even 20 years if it's the same deliberate behaviour, or failure to notify is another ground for 20 years. But today we're only talking about deliberate behaviour. So Code of Practice 9 is generally if you want that immunity from prosecution. Otherwise, you can consider other routes to disclose liabilities. But Code of Practice 9, if you approach HMRC first, it does give you the opportunity to take control of that investigation. And we'll cover how that proceeds in the next few slides. So an immunity from prosecution should be granted providing you make a full disclosure and there's full cooperation. If somebody doesn't disclose fully, then the revenue can revert to prosecute. Or if, following the Code of Practice 9 case conclusion, if the revenue finds some new information that was not disclosed, again, the individual could be open to prosecution. So it's extremely important to make a full and frank disclosure of all tax irregularities during the investigation or disclosure. And full cooperation is expected, and obviously that also reduces any penalty HMRC will charge as part of the procedure.
Thanks, Dave. So first, we're going to have a look at if you receive one of these letters from HMRC offering you the opportunity to enter the COP9 process, but you don't believe that you've actually done anything deliberately, so you don't want to accept that offer. So generally, you'll receive one of these letters if HMRC suspects that tax fraud has been committed, and this could be due to a variety of intelligence sources that they have. If you genuinely believe that you haven't committed any tax fraud, you've not had any deliberate action that is or knowingly kind of underpaid the amount of tax that you should have done, you can simply send a denial, a rejection of that offer within 60 days. As Dave's mentioned, the time limit of 60 days is vitally important, so you still need to respond within that time. But you can simply send back that denial. Within that thought process of receiving one of those letters, you might realise that there has been something, some loss of tax brought, but it wasn't due to any deliberate action. There is scope to at least inform HMRC, and it would be very wise to kind of at this stage inform them of anything that has been identified. It doesn't necessarily mean that it would go within the COP9 process, because for that to be the process that you go through, there needs to be a deliberate action, but it does still kind of open that avenue with HMRC and that cooperation to bring your affairs up to date. If you haven't done anything deliberately, you can't then go into that COP9 process, and the benefit of going into that process, as Dave's mentioned, is that immunity from criminal prosecution. So it's really important to tread carefully with these kind of inquiries. Once they've received the denial, they'll review it, and then they'll kind of open up a full-blown investigation into your affairs. And as Dave said, that goes back to 20 years. So it's a really significant, really kind of thorough and in-depth inquiry. It's really important to kind of cooperate with that. And because you've not gone into that COP9 process and you don't have that benefit of that immunity, it's really important to cooperate with HMRC to identify everything, and still kind of support that view that it was not deliberate, whether it was careless or a genuine mistake. HMRC have a variety of powers and penalties. Obviously, they can rely on to obtain various sources of information, evidence to support their case. And again, the penalties for the penalties for any kind of inaccuracy are much more severe if there's a lack of cooperation there. So if this investigation falls outside of the COP9 process because of the denial, they will still have those avenues to get that information they require. So it's worth having that good cooperation, that good quality of disclosure with HMRC to kind of minimise the exposure that there will be to any potential penalties down the line.
Yeah, no, that's crucial, Dane. Thank you. I mean, we have supported clients who've made denials. If the revenue open a Code of Practice 9 investigation, it is to be remembered that's an allegation. Obviously, it is very serious. The revenue don't open a Code of Practice 9 inquiry usually on a whim. It's certainly not going to be a random review. They will have a huge amount of data or information or evidence, but it is still only an allegation. It's not 100% certain that the revenue's information is accurate. And I have assisted clients with denials of Code of Practice 9 investigations. So obviously then you're not admitting fraud, you're not admitting any tax evasion. There's nothing that you've done wrong. And therefore, I would never recommend a client to accept a Code of Practice 9 just to get criminal immunity from prosecution. If you've not done it, you can't admit to something you've not done. So if it was a careless error or a mistake, or if there's maybe nothing wrong, then you have to stand your ground and deny it. As Dane's mentioned, that will result in a full investigation, which has to be defended. But in cases where there is no tax liability, or the behaviour was one of carelessness or relying on an advisor or somebody else, for instance, then again, people shouldn't be pressured into admitting fraud if it hasn't happened. So denial is an option. The Code of Practice 9 procedures changed in 2014. Before that, there was a third leg where you could deny and cooperate. That denial and cooperation box was removed, and now you only have the black and white yes or no, a binary view of yes, I've committed fraud, or no, I'm denying it. But as Dane said, even if you deny it, you can still make representations to HMRC to cooperate. If something's maybe been careless, then again to flag that up as soon as possible. But take professional advice, obviously, when you get a Code of Practice 9 inquiry. So prompted ones are always going to be either denial or acceptance. You're not going to make a voluntary denial disclosure. That just defeats the whole object. You can't request Code of Practice 9 immunity from prosecution and deny tax fraud. It doesn't go together that way. If you're making a disclosure that's not fraud and it's just carelessness, then use one of the other disclosure facilities. Code of Practice 9 is not appropriate for a denial of tax fraud on a voluntary basis. So denial will only be the result of a prompted review by HMRC. So when we say prompted, we mean the revenue have opened the investigation. And you have then, revenue give you 60 days to respond. In that 60 days, you can draft together, and there are specific forms HMRC send out, you draft your outline disclosure. So what that is covering is your admission of guilt, of admission of tax fraud, that tax evasion that's happened, what that was, when it occurred, and as best as possible, maybe an estimate of potential liabilities. So say, for instance, you've got somebody who's running a shop, a business, and for whatever reasons, they've ended up in a situation where they've understated sales. They've got an inquiry from HMRC, and after considering the situation, speaking to their advisor, checking their records, if they're saying, yes, hold my hands up, I didn't include cash takings. I'm now going to confess those cash takings. And again, the outline disclosure is going to say, I didn't record all the cash takings from the business. Maybe it was due to pressure of work. Maybe it was due to staff problems. You left it to a manager. They didn't record it properly. And maybe the tills weren't working. Maybe there's a reason for it. happening maybe at the beginning, but obviously if you're accepting fraud, then you know that you found out that cash wasn't included in the accounts, and you're now stating, yes, I didn't include that cash, I should have done, I did it knowingly, and I've understated my accounts accordingly, and I did it for a period of 10 years. The information will be potentially through deposits in bank statements. It may be through purchases of assets that you've used for the cash. It may be that you've used that cash to buy supplies and goods for sale, and they weren't included in the accounts as well. So you're given a full and frank disclosure of what happened. It should also include any mistakes or errors that have been made. So anything that isn't fraud or tax evasion but was careless errors, they should also be included in the outline disclosure. It's important that the outline is accurate as best as possible. It doesn't, it's not, you're not dotting the I's and crossing the T's. It's not a full report. It is just a high-level review. It's an outline. It's a brief summary of what's happened, what you did, why you did it, and which years are involved. It's not the detail. The detail will come later. But if you miss something off, then the revenue will obviously take maybe a dim view later on. So if you knowingly had been involved in some other tax fraud that you're not included in the outline, then bring it in later. There is a risk of criminal prosecution. If you forgot about it, then obviously that would be considered with mitigating circumstances, depends on the facts. But it's crucial that the outline covers as much as possible of what the issues are that you're disclosing. And then obviously the revenue either accept or decline that outline. So if the revenue refuse the outline disclosure, they will then take over the investigation. There's a risk of prosecution again. So if the revenue have opened the inquiry because they've got certain information and details, for instance, and you don't include any of that in your outline disclosure, the revenue may say that outline is inadequate and we don't accept it and we're going to run the investigation. Or they could even refer it straight to prosecution. So it's important the outline is as accurate as it possibly can be to the best of your knowledge and ability, but it's not a detailed report, it's an outline. The process will then progress to the next stage.
Thanks, Dave. Yeah, and similarly, if it's an unprompted one, as Dave's already mentioned, you wouldn't do an unprompted denial. You wouldn't do a voluntary disclosure to deny tax fraud. But if you accept that tax fraud has been committed, you've deliberately, knowingly filed inaccurate returns, you can volunteer to kind of go down this route and submit a request to HMRC to enter the COP9 process. From submitting that request, they will then obviously review and send out the outline disclosure forms, and then it kind of falls along the same lines as what Dave just talked about with the prompted one, whereby you've got 60 days to outline all of the inaccuracies, deliberate and non-deliberate, and then you kind of entering into that process, which we'll talk about in the next few slides.
Yeah, so I mean, again, it's an extremely useful tool. You know, if you have committed tax fraud, then it's best to approach the revenue first. You're going to maybe end up with half the penalty if you make a voluntary disclosure. And Code of Practice 9 is there to make voluntary disclosures for tax fraud. So you're holding your hand up, I've committed fraud, I want to disclose it, I have sleepless nights, I want to do it before the revenue open an inquiry. So when it's gone past that stage, so you've submitted your outline, the outline's been accepted, be it prompted, unprompted, whichever way it is, the next situation is the revenue will want a payment on account. You can send that in with the outline disclosure, you can send it in afterwards, you can send it in during the process. The revenue will usually, I've never seen a case where they don't, request an opening meeting with the taxpayer, the client. Now, obviously, whether the client or taxpayer attends that meeting will depend on the individual case and the individual circumstances. My view is open, depending on what the case is and who the person is, and what their experience is as well. It's these meetings are not as, depending on the inspector you're dealing with, but they're not quite as investigative at the opening meeting as an investigation inquiry, unless obviously you're denying, in which case if you're denying, you probably won't want to be in front of HMRC, unless you're absolutely 100% confident in rebutting any arguments from the revenue. There can be quite intensive investigative meetings in that scenario. But usually it's the first meeting is the revenue getting to understand what's happened. If you've made an unprompted, they just want to know a bit more detail about your history. They might not know you at all from their file. There may not be much information on their systems. So it's a review of who you are, what you've done, and what's happened. And they will obviously ask questions about the issues you've reported in the outline disclosure. They will go through that. If I don't think a client would be very good in front of HMRC, or they've got health issues, or too nervous, etc., then I wouldn't recommend they attend the meeting with HMRC. You obviously have to give mitigating circumstances to revenue for the reasons why. There is no compunction to attend these meetings. The revenue can't force someone to attend the meeting. They have no right to insist on somebody attending the meeting, other than obviously the revenue might be suspicious about why you're not attending, why you can't be spoken to directly. Again, there may be good reasons for that. And equally, as an agent, you consider the case-by-case basis what's best for the client. And in some circumstances, it's not a good idea for the client to be meeting with HMRC for all sorts of different reasons. And you have to cover that as an agent with the inspector and HMRC, because otherwise HMRC may consider non-attendance as a lack of cooperation. Now, depending on the case and the issue, I would certainly strenuously defend and argue against that. And there are all sorts of reasons why people don't attend meetings, or why they shouldn't attend meetings. And one of the reasons why a client may engage an advisor is because they want the advisor to deal with it and not to have to deal with HMRC direct. But obviously it is a hurdle that has to be overcome. The revenue will normally expect and request a meeting. During that meeting, at the end of that meeting, what usually happens, unless the revenue are running the investigation, maybe it's a denial, then the revenue will ask the taxpayer, the client, to instruct the advisor, a specialist, to compile a report of the tax issues. So the tax fraud that's been admitted, or the tax fraud that's been committed, would then be written up in a report by the advisor, setting out the years involved, what's happened, and the calculations, etc. The content of that report will be agreed and discussed with HMRC in advance, and then there'll be various progress meetings as the process continues.
Yeah, and then continuing on from that, so during that scoping meeting, you agree the areas to focus on, and with strict. I mean, the HMRC are always open to negotiation if things slip by for whatever reason, but you will set deadlines for when you expect this report to be submitted and the content to be included within that, and that will generally kind of include those things that were contained within the outline disclosure. But it might be that actually in the interim period, other things are identified that HMRC would like a bit further information on. So you agree those at the opening meeting, at the scoping meeting, and then you have a regular progress meetings throughout. So it might be that you've got 18 months or 12 months to provide the written report. HMRC would like to see some ongoing kind of progress meetings, and they're really useful to kind of just make sure that you're on the right track. You're working with HMRC to kind of progress the issues that they want to be progressed. And yeah, that's kind of an ongoing open correspondence. At the point where you then submit the report, you've hopefully kind of managed to quantify all of the inaccuracies for the relevant years. You finalise that, you submit it to HMRC, and then they review that, and then they'll review that in a lot of detail and come back with potentially further. If it's all been done, there shouldn't really be anything that they're unaware of at the point it's submitted because of those ongoing meetings. But once it has been submitted, they may accept it, or there's usually a little bit of negotiation back and forth depending on what the issues are. I think given that these inquiries can go back 20 years, or they cover 20 years because there's an element of deliberate in there, there's a lot of it's impossible to think that there's going to be records covering all of those earlier years. If you think back to kind of the early 2000s, would you realistically have records for everything? So there is going to be some assumptions that will have to be made, some reasonable assumptions that have to be made. So HMRC would like to know maybe the analysis that's kind of led to a particular view, but that shouldn't come as a surprise to them, given that you've got those ongoing meetings. And then there's just that final kind of, after the report and any challenges have been addressed, you get to that final position. So I think Dave can talk through now.
Yep. No, thank you, Dane. Yes. So you're quite right. In many cases we've dealt with, the revenue usually ask a question or two. They want to understand maybe why that document is missing, or understand why you made a particular assumption or a particular estimate if it's not apparent in the report, or the revenue just like to ask some questions, or equally they have to compare the report to their own information, and if there's anything missing on that, they will want to consider that. One of the things I didn't mention on the earlier slide, where you have the initial meeting with HMRC, one question they always ask the client or the advisor is, what is your experience of dealing with Code of Practice 9? HMRC in their Code of Practice 9 guidance always stress that this should be handled by specialists with Code of Practice 9 experience. It's not for the inexperienced advisor or somebody who's not familiar with the Code of Practice 9 process. The revenue will generally say to that advisor, you need to seriously consider appointing a specialist. The reason for that is because of the seriousness of the issues. As we mentioned, there is still in the background the risk of criminal prosecution, and if somebody is not familiar with how to complete a report and the processes involved, then it can obviously cause problems or issues for HMRC. So one of the questions they always ask in the beginning is, do you have experience of Code of Practice 9 reports and the process? So if you don't, approach a specialist, please. So we're coming to the end. What happens at the end? So the report's been submitted, it's been challenged or accepted by HMRC. You would then have to negotiate on the penalties. The report would usually maybe include a self-assessment of the penalties, or it may leave it open for complete negotiation with HMRC. So you would then have a closing meeting with HMRC around maybe the penalties, what level of those penalties you can agree and accept. And if we're going back 20 years, the penalties have changed over that time. It used to be anything between 0 to 100, up to 2009-10. 2009-10 onwards, it's been on this stepped grades of levels of behaviour. And within the report, you may have some genuine mistakes. There may be some careless errors, and there will be some deliberate behaviours as well. So you could end up with different years, different issues having different penalties. So it can get quite complex. It's not a single penalty that goes across the board unless it's a single issue. So then you would negotiate a settlement with HMRC. You'd sign a settlement contract, which would include the duties payable, interest and penalties. Interest obviously will accrue from the original due date to the date you make the payment, or obviously to the date you've made payments on account as you've gone along towards the liability. VAT liabilities, VAT duties cannot be included in a settlement contract, even if it's a Code of Practice 9 that involves maybe CT or income tax and VAT as well. The VAT will have to be assessed as a formal assessment, and with VAT penalty notices, it can't be wrapped up in a settlement contract. So that has to be slightly different. In addition to penalties, there is the risk of naming and shaming. So that's for what the revenue view in the rules and regulations around deliberate defaulters. The tax has to be a minimum of 25,000, and you've got a less than full mitigation of penalties. The revenue can then issue you on their list of names for deliberate defaulters. That list it used to be published every quarter. I think it fell fell over a little bit during COVID, but the most recent list was published in June 2021, and every quarter people who've been found guilty of tax fraud are listed on there if they've not achieved a full mitigation of penalties. So this is where the cooperation comes in. You get full cooperation, full disclosure, you should get a mitigation of the penalties down to avoid the revenue considering this. It's not an automatic that the revenue will list it, but if you fail any of those criteria, then the risk is the revenue could publish you in their online list. Also, what the revenue can do after the case is closed for all deliberate defaulters, there may be a period of monitoring afterwards for a number of years or a number of returns. The revenue can do that, and they will look at those returns in a finer detail, or they may even request that when you submit your next return, your next VAT quarter, or your next CT accounts, you include further information on the revenue request. So there can be some ongoing issues as well. Obviously, the revenue want to make sure that after this has been concluded, you don't continue to commit tax fraud, and they will check on you. You are obviously on their radar, and they will keep an eye, they will keep a view in the future. And any second failure could result in a prosecution. Obviously, this is a single chance. There's no guarantee they will not do the same thing next time. They won't necessarily give you the immunity on a second investigation. They may just go straight to prosecution. So it's important again that once this is concluded, it's not a get out of jail free card in that you can then continue or go back to committing some tax fraud. If you get picked up again, the risk is obviously higher. The penalties are higher. The risk of prosecution becomes higher. It's important to do the right thing and get your returns correct going forward after this has been concluded. So I think you've probably got the impression here from this this talk that Code of Practice 9 is extremely serious. It is because it's one down from prosecution. So if the revenue have decided we're not going to prosecute you, we'll do a Code of Practice 9 investigation instead. We'll do a civil settlement to include a tax-geared penalty. So we want a financial settlement of penalty, interest and tax instead of prosecuting you. But still throughout the process or at the end, there is the risk of prosecution for any failure involved in the process. Otherwise, again, it's a fantastic opportunity if you do want to come forward, if you know you've committed tax fraud, and instead of waiting for the axe to come down, then maybe go forward to HMRC now, hold your hand up, say I want to make a disclosure, I admit my fraud, say what it is, and you will then get an immunity from prosecution. So although obviously that's still serious, it does give you that opportunity to wipe the slate clean, do the right thing for the past and move forward. Thank you very much for watching and attending this webinar. Please contact us at Churchill Tax Advisors should you have any questions, should you need advice, if you have a case yourself that you need representation for. If you're an advisor, if you're an accountant, and you've got a client who needs help or assistance, or you're out of your depth, or you're not sure what to do, or if during an investigation something is uncovered, you can switch from an existing standard self-assessment or VAT investigation. At any point, you can make a voluntary disclosure for Code of Practice 9. So if during an investigation you suddenly realise, actually, I've not told you about this for the past, you can still go for Code of Practice 9, so you've got the immunity from prosecution at any stage. You can still apply for that. Obviously, you don't mention it to the investigator that's dealing with it. You approach a specialist, us, if you know us and want our advice, and we then go separately to the COP9 team. We don't mention it to the investigator at all. You then are at risk of self-incriminating. So if you know you've done something wrong and you tell that inspector, you don't have the immunity from prosecution. They could then refer that case to the prosecution team, and there is a risk. So even during a standard investigation, if you uncover a problem, if you realise there is an issue in the past that you've maybe tried to hide, or you generally have forgotten now, but at the time you did it deliberately, then you can still go through that process. It is still available. Thank you very much. We don't have any questions that have come through today. Was there anything else you wanted to add to that, Dane?
No, that was it. Thanks. Cheers, Dave.
Thank you very much. Yeah. So we've got many years of experience of dealing with Code of Practice 9. We're handling a number of clients at the moment with Code of Practice 9 investigations with HMRC. They're all at various different stages. Some at the report stage and drafting and doing the analysis work, which is ongoing. Some are at the submission stage, and some are at post-submission stage. We're trying to agree settlements with HMRC. Some are at the very, very early submitting the outline disclosure. So we've got a range of cases, and we make a lot of give a lot of advice to our accountants who need the specialists, our IFAs or solicitors who've got clients who need specialists. We work alongside other advisors, and we're always there at the end of the phone if you want to give us a call for advice. Thank you very much for listening and joining us today. Please join us in a couple of weeks' time when there will be a tax advice webinar, and join Dane and myself in a month's time where we will cover another tax investigation topic. Thank you. Goodbye.
Cheers.